just think it's important to clarify.
Yes.
To not convolute these two things, because buying a house that you live in is more like, a toy, right?
Yeah, and it's funny, you hear like the best investment you'll ever make is the house you live in, is your house.
That was Millionaire Next Door when interest rates were like 13%.
Yeah.
And like, if you didn't own a house, like you could never get ahead because like, times have changed slightly.
But mathematically, like that's just you.
But it's never been like
the S&P fund in your 401k at work is better than the house you live in, like mathematically, just from the numbers. Now, okay, so that's one, and I think that's a great clarification. Here's another perspective: is real estate as an investment, rental property investment, which ends up, like a lot of commercial ends up being that way, or residential investments. When you add revenue from rental incomes on top of that does increase your return. So I think I was going to add, one of my misconceptions is about this concept, that a lot of people do the math on the returns of rental real estate as if like it's paid off, like the returns on this are killer when the loan's gone, but you don't realize that you got to go a couple decades of having a mortgage on that thing where there's not a lot of clearance in cash flow, not a lot of profit. And then the returns are really good. I mean, when you have a house that is paid off and you have rental income from it, that's a good return. Your expenses are low and your revenue's high. But if you kind of drag that return back over the whole entire holding period during the time when you had a mortgage on it, it becomes a more average return. Good rental real estate held long enough does start to resemble a higher return than just the appreciation on it.